Gold today is getting a small bounce. Notice gold again is hovering right above our first target that we hit last week. So last week, first target achieved. Again, now it's kind of deciding, does it want to head higher to this level around 41 and a quarter where you see the sideways consolidation, or does it want to break lower? I think either way, probability wise, is at 75% per my calculations that we should be going lower. But again, gold pausing the last couple days. We got this one bounce, by the way, is the down day from last week. That was decent. We did see gold get a bounce, but it's just stalled out here, so we'll have to watch. On silver, folks, it had a good bounce last week. I'm on the weekly chart to show that, but if we go to the daily, it's basically forming the same two sideways bars as gold is doing. The question here is, notice where it's forming. I gave you this as resistance right here, right? So you can see these three candles, and then you have two candles on this side. So it's basically deciding, does it want to go down or does it want to break back up on silver? We don't know yet. We're watching to see.
In this powerful market breakdown, veteran trader Gareth Soloway discusses how gold and silver are setting up for their next big technical move. He explains that recent market volatility and the Federal Reserve's unclear stance on rate cuts are creating the perfect storm for precious metals. While many investors chase short-term rallies in stocks, the smart money is quietly rotating into hard assets. Gold's recent strength above key support levels suggests momentum is building toward another breakout phase. Meanwhile, silver continues to trade within a tightening range, often the calm before a major surge. This week's data showing central banks continuing to buy gold adds further fuel to the bullish outlook. History shows these setups don't last forever. The next leg higher could redefine the market's direction for years to come. If you value real insight into gold, silver, and the global economy, don't forget to like, share, and subscribe to the channel Your Edge in the world of real money.
So last week, we had the Federal Reserve announcement. We had a big meeting between Trump and Xi, and we also saw mega caps reporting earnings. Let's go to gold. Gold today is getting a small bounce. Notice gold again is hovering right above our first target that we hit last week. So last week, first target achieved. Again, now it's kind of deciding, does it want to head higher to this level around 41 and a quarter where you see the sideways consolidation, or does it want to break lower? I think either way, probability wise, is at 75% per my calculations that we should be going lower. But again, we'll have to watch and see where that ultimately trades out. All right. So again, guys, I'll be keeping a very, very close eye on this and monitoring it. But again, gold pausing the last couple days. We got this one bounce, by the way, is the down day from last week. That was decent. We did see gold get a bounce, but it's just stalled out here, so we'll have to watch. Silver. Silver, again, has the bigger parallel. This enabled me to call that top on silver. That was perfect. Again, just using this beautiful parallel. Notice how on the S&P 500 are right at the high end of that parallel. You see in this case what happened. We actually had a pretty sharp correction. Kind of what I'm expecting on the S&P as well when we talk about that trend line. Just going back to that S&P, see the parallel here? So again, the parallels work. I mean, it's just amazing to me how you have these parallels and they just pinpoint levels. Now, listen, it's not 100%. I think we always have to remember probability doesn't tell you it's going to happen. It tells you it's most likely going to happen. And there's a difference there. There's a big difference because most likely means that there's a chance it doesn't work. A level doesn't work versus going to is essentially a guarantee. No guarantees in trading and investing. I think we're all smart enough to realize that at this point in our careers. Even if you're a newbie, just understand there's no guarantees. Okay, on silver, folks, it had a good bounce last week. I'm on the weekly chart to show that, but if we go to the daily, it's basically forming the same two sideways bars as gold is doing. The question here is, notice where it's forming. I gave you this as resistance right here, right? So you can see these three candles, and then you have two candles on this side. So it's basically deciding, does it want to go down or does it want to break back up on silver? We don't know yet. We're watching to see. Oil continues to hover here. You still have a little bit of an inverse head and shoulders. So I would give this more of a neutral to slight bullish bias candle. It hasn't broken the neckline yet, which is the trigger for the head and shoulders to really play out. This would be this trend line here. So if we break above 62.40, then it's in play for probably a move up to maybe as high as $68, $69 a barrel, maybe even as high as 70. Who knows? Maybe right up there. That would be a nice little move up. But right now, until it breaks this line, it's not in play. It's just a formation, which is great. A lot of people get overly excited for inverse and head and shoulder patterns when they're forming. It's good to take note of them because you want to be aware. But until it cracks that neckline and closes above or below, depending on if it's an inverse or a head and shoulders, that's where it triggers. That's where technically you want to make the trade, because that's where the highest probability is that it's going to play out to target. Natural gas here, folks, nat gas. This is your weekly chart. You can see the breakout has occurred. We did see a nice move. If I flip over to my daily chart right here, let's refresh it. You can see nat gas was continuing to move up. It stalled out a little bit here, but again, this is a breakout. I mean, it is what it is, right? It never retraced enough for me to get in on this trade, so that's okay. It's just the nature of the beast. But nonetheless, this is a breakout. I would say upside favors around 4.95 to $5 potentially on this chart, which would be this pivot high right here. You can see this high here is your level. Right now, you're kind of dealing with this zone. If we draw that across, you can see these little highs right in here and right here. That's why price is kind of struggling there. But if we get through, you're going to about the $5 level on natural gas. If we take a look at the S&P futures, we are trading slightly higher today. So again, this is your action from Friday. You can see early in the day, we saw a big sell-off. And then late in the day, we came back with a little bit of profit taking at the close. All in all, we saw a flattish type day on Friday on the markets. Now, couple things, continue to monitor the early selling, okay? When you see selling in the first half of the day, it's generally driven by institutions. The reason this is the case is because they are going to be the ones unloading when there's the most volume in the market, right? There's no point in them trying to sell their huge amount of shares when the volume gets light on an afternoon on a Friday. So in general, when you see big selling early and then the markets float back up, that's because the institutions are dumping. And then what you see is, again, they shut off the valve, they shut off the sell valve, and then the markets float back up because retail continues to leg into the market, right? Retail is looking at this market like it cannot break down. It won't break down. I disagree ultimately, as you guys know, but that's the way retail is feeling right now. All right. Couple things we have to go through. Number one, we have to go to our weekly chart on the S&P 500. This was absolutely remarkable. This is the one thing I said in Friday's My Trading Game Plan. I said we must be watching this parallel. All right, this parallel, again, your low from March of 2020 through the bear market lows to the liberation sell-off lows. And that line dragged up in a perfect parallel to our bull market from 2021. And look at what we had here last week. Now, this is not an official topping tail per my calculations, but it is still within the band of the parallel. And that continues to be a warning signal for me in trading, right? In other words, we saw the last time we were at these highs here, what did we see? We saw a nasty bear market. Each time we've been at the lows, we've seen a move up, right? A move up. Okay, and a move up. And so essentially this tells us we have teeth. There are teeth here on this parallel. In other words, we have to take it seriously because, again, we have the moves off the lows and off the highs back down. That would imply the potential for a pullback here in the markets, and actually a pretty steep pullback if 2021's high and the bear market was any indication. In addition, we have that secondary trend line right here that I've been following as well. Again, connecting it right through that October 2023 low, through the lows in August 2024, the low in January 2025. We broke down with the liberation sell-off, and we've come back up. You can see it tagged it here, had a small pullback, and there we tagged it again. And look at that, how that candle pierced. Early in the week, we were above it, and by the end of the week, we sold off. Now, the next thing we got to talk about is the disparity that continues to get bigger and bigger. What am I talking about? I'm talking about equal weight S&P. So again, if you look at the equal weight S&P, which is every stock in the index is equally weighted. So it basically tells you the health of the S&P overall from every company's perspective versus the S&P 500, which is market cap weighted. So a name like NVIDIA that's $4.5 trillion, actually $5 trillion now, that is going to have a massive overbearing influence on the S&P, right? Because it's $5 trillion. I mean, there's a lot of companies you could combine and you're not getting to 5 trillion. So it really, the regular S&P, just like the NASDAQ 100, it shows us the health of the big players, the AI trade. But the RSV, which is the equal weight, let's flip over to that. Look at this here. And so the reason I'm bringing this up is if you look at the outperformance, the top line here, this is the S&P 500. This is the bottom blue line is the equal weight. Look at the disparity now that has been created. You have a massive disparity between these two of how far apart they are. In fact, you can look at the last time we topped out. This is how far we were, right? These two high pivots right here. We are way farther apart now. Now, part of this is the mere fact that the AI trade has gotten way out of control. All right. So again, just to give you some stats, 75% of the gains in the S&P 500 in the last 2 years are because of the AI stocks, right? So again, that's incredible. In addition, if you think about GDP, right? GDP, 90% of GDP growth is due to the AI trade and the CapEx spending. All right. That basically means that the whole rest of the economy, anything not related to the S&P or to the AI trade, has basically gone silent. There's no growth. It's essentially a stagnant economy.
The charts are beginning to tell a story that fundamentals have hinted at for months, a transition from paper illusions to real, tangible value. Every dip in gold is being met with quiet accumulation, not panic selling. Silver's consolidation phase is tightening like a coiled spring, setting the stage for a potential surge that could catch the mainstream completely off guard. The financial tides are shifting, and the smart investors are already positioning themselves where history has proven value always returns. But this time, the backdrop is different. Global debt is higher, currencies are weaker, and confidence in central banks is fading fast. These aren't random price swings, they're signals of a larger monetary reset forming beneath the surface. The next move won't just reward traders, it will reshape how the world views wealth and security itself. Let us know your thoughts in the comments below. Share this video and hit the like button. Thanks for watching, and don't forget to subscribe.